With prices for NdPr stabilising near $65 a kilo over the past month, two ASX listed rare earth companies on opposite sides of the globe have been busy advancing their flagship rare earth projects, with both Lindian Resources and Arc Mines poised to deliver a strong finish to the calendar year. While it's been a topsy-turvy ride for the rare earths market in 2024, global pricing dynamics are still a central talking point for investors as demand for rare earths from sources outside of China remains in play. But even factoring in a moderate bounce back in August, rare earths companies targeting a leap from exploration to production may still find it difficult to make their numbers stack up with prices at these levels. However, for Lindian Resources, the underperforming NdPr price actually formed a key plank of its recent feasibility study for the high-profile Kangankundi project in Malawi. As the feasibility study outlines, stage 1 of development at Kangankundi is projected to have a pre-tax NPV of $794 million, an internal rate of return of 80%, and an average annual EBITDA of $84 million. Even at low spot prices of $50 per kilo for the NdPr, the Kangankundi project delivers a positive EBITDA, and with it, a strategic advantage through its ability to commence production in a forecast rising price environment. In short, the low-cost structure means that stage 1 will be one of the very few global rare earths projects which can deliver a positive annual EBITDA at current low rare earths prices. One of the many attractions of Kangankundi is its sheer size and grade, and stage 1 development is set to produce on average over 15,300 tonnes per annum of premium concentrate with 55% TREO grade with low levels of thorium and uranium and limited acid consuming minerals. Operationally, it is a simple flow sheet based on gravity and magnetic separation. Basically, it's about crushing and grinding, which enhances the low cost status of the project. Critically, the very strong economics of stage 1 and the large resource endowment of the Kangankundi project has elevated the potential for project expansion, with a stage 2 expansion study scheduled for the back half of the calendar year. And with the level of corporate activity in the rare earth space this year, headlined by Aussie magnate Gina Rinehart scooping up a significant chunk of Lynas rare earths back in April, Lindian remains an incredibly attractive proposition for savvy investors with deep pockets. Separately, junior metals explorer Arc Mines has caught the market's attention with ongoing exploration and development works at its fully owned Sandy Mitchell rare earths project in North Queensland. Since acquiring the project in March 2023, the company has executed on a comprehensive drill program which led to the declaration of a maiden mineral resource estimate in May this year. The results of that MRE, combined with recent metallurgical test work, have so far confirmed what the Arc management team initially suspected, that Sandy Mitchell represents a unique opportunity to develop a scalable rare earths mining operation with low-cost downstreaming processing right in Queensland's backyard. For its maiden MRE, Arc declared an indicated mineral resource estimate of 21.7 million tonnes at 1,419 parts per million monazite equivalent. The resource also included a basket of high-value heavy minerals such as zircon, while magnetic rare earths, including neodymium and praseodymium, made up a high proportion of the TREO basket at 24%. And in terms of Arc's commercialisation strategy, it's the quantum and grade of the monazite equivalent that presents a real opportunity to add value as exploration continues. In its MRE announcement, Arc noted that with reference to current market prices for monazite concentrate, the reported monazite equivalent grades are expected to support strong project economics through simple, low-cost downstream processing. In addition, beneficiation test work carried out to date on Sandy Mitchell samples showed the highest upgrade was observed through simple gravity separation, confirming that the material is amenable to straightforward beneficiation by gravity processing. Lending the project further upside, Arc followed up its maiden MRE with the results of an extensive reconnaissance drilling program, which culminated in an expanded exploration target for Sandy Mitchell, estimated at 1.3 billion tonnes to 1.5 billion tonnes at 1,250 to 1,490 parts per million monazite equivalent. With those sorts of numbers, Arc said that the exploration target places Sandy Mitchell as potentially one of the world's largest surface expressed placer rare earth projects. In light of its exploration work carried out to date, Arc has a number of important milestones coming up in the second half of the year, starting with expanded mineral resource update that will incorporate the results from its phase 2 drill program. Along with ongoing metallurgical testing, these results will form part of a forthcoming pre-feasibility study, which is expected to be reported in the December quarter. With both Lindian and Arc well advanced across multiple fronts in a rebounding market, it's enough to give ASX investors with an interest in rare earths plenty of food for thought in the months ahead.